Every year, when people come to file their taxes, many of them, they have receipts for the donations, medical expenses, mortgage interest, property tax, and they think that when they file their tax, they will be getting all this money back. Unfortunately, it doesn't happen that way. Let me explain how these deductions work. When it comes to tax filing, there are two types of deductions. Standard deduction that IRS allows you to take are itemized deductions. IRS allows you to combine different deductions, and if these deductions are more than the standard deduction that IRS allows, you use itemized deductions because higher the deductions, lower the tax.
I want money, Jack.
So let me give you an example, and hopefully that will explain how this works. So let me explain standard deduction. This is your standard deduction. It's one bill. This is your standard deduction that IRS allows you to deduct from your income. Now I am holding 4 bills in my hand. So let's say this one is your medical expenses, which should be more than 7.5% of your adjusted gross income. Then I have another bill. This is, let's say, your state and local taxes that you paid. The third bill is, let's say, your donations. The fourth bill is your mortgage interest. So combined, these are your itemized deductions. Here, your itemized deductions are $95. This is your standard deduction that is allowed by IRS. This is $100. So which one you are going to choose? Obviously $100. It's one, but its value is more. So you will take $100. Now, again, I have 4 bills, your medical expenses, your mortgage interest, your donations, your state and local taxes. But now the combined value of these is $110. One standard deduction, $100. These are 4 combined, $110. These are your itemized deductions. So obviously now your itemized deductions are more than your standard deduction. So you will choose itemized deductions to lower your taxes. Now let's go to the example. So this example is, let's say, for a couple, husband and wife, filing their tax, married filing jointly together, and their combined income is $50,000 for the year 2023. It doesn't matter only one spouse had 50,000 or one had 30, the other one had 20, doesn't matter. Combined income is $50,000. So how standard deduction versus itemized deductions work? So let's work on standard deduction first. Combined income is $50,000. So this is the standard deduction, $27,700 for 2023 that IRS allows you to take because you are not going to pay tax on your full income. You deduct this and the balance is $22,300. This is your taxable income and this is the amount you have to pay tax on. The tax on this amount, $22,300, is $2,239. This is the actual number for 2023. So if you do have taxable income that is $22,300, your tax, federal tax, will be $2,239. Now we go to itemized deductions. Same scenario, the combined income is $50,000. You are not going to pay tax on $50,000. So you are going to take your itemized deductions. So let's say your medical expenses, your mortgage interest, your property tax, your state and local taxes, your donations, they all come to $30,000. So now your taxable income is $20,000. So for 2023, if your taxable income is $20,000, this will be your tax, $2,003. So as you can see, if you use standard deduction, you will be paying $2,239. If your itemized deductions are more than standard deduction, in this example, $30,000. So you will be paying tax on $20,000, which is $2,003. So in this example, using itemized deductions, you pay $2,003 and you save $236 in taxes. Here is a thing I want to clarify, that a lot of people, when they come, they have donations and somehow they think that they are going to get back all the donations they made. And in this example, you can see it's not the case. This is what it is. So at the end, what I want to say is that even though itemized deductions such as donations, medical expenses, property tax, mortgage interest, state and local taxes, they are deductible. But you cannot take benefit of these deductions every time.
I got it.
Oh, I got it. Thanks.
I got it, buddy. I got it.
I got it! Go!
If your combined itemized deductions are less than standard deduction that IRS allows. I hope it helps. If this video has provided some value to you, please subscribe to my channel, share and like the video. I thank you so much for watching.